What is the difference in tax liabilities to where you will incorporate?
It all depends of the state of those states that charge income tax for at the state level. As I explained before, there are two types of income tax, or there are two levels of income tax in the United States. There is the federal level, that is to the IRS, Internal Revenue Service, and there is the state level that you pay that to the Department of Revenue at the state. And for the most of the states charge income tax to companies. Let's say all of the states in the US, they charge income tax to companies, except for the states that are, let's say, considered offshore, meaning that the states that do not show the identity of the individuals. Those are considered offshore, and those states do not charge income tax at the state level. It means that in Delaware, Wyoming, Nevada, for example, there is no state income tax for companies. It is only they charge a different type of tax, a franchise tax. We speak about that in a further in a question in a next question, or probably two more questions. We'll speak in detail about that. But those states do not charge income tax at the state level. But remember, the companies that are open at this state, they do pay taxes at the federal level if the income comes from US sources. That's you have to be very aware of. So states that do charge income tax, there is a tax liability at the state level for income tax. States that do not charge income tax, there is no tax liability at the state level in states like Delaware, Wyoming, and Nevada, for example. But but those companies, as I said before, they do pay federal income tax at the federal level. All of them pay income tax if the income comes from U.S. sources.